Thursday, May 18th, 2023, Monaco 64, home of alternative economics and contrarian views. I'm sure a lot of you are very frustrated with what's going on in terms of the whole monetary economic system and how the powers that be seem to keep things going forever and ever, especially for those of us who have studied how the system works, how the system is based on thin air, really. It's quite amazing, and that's what we're going to talk about today. In my opinion, this is the biggest economic psyop ever. And unfortunately, the majority of people still buy it, and that's why I think they're able to keep things going. So yeah, Rudy is here. We got up fairly early today. We went out for a nice walk. It's nice and sunny. It's a bit fresh, but it's still May in London. You can feel the cool air, but it will warm up later. And before I start talking about this psyop, the fact that they're able to kick this can down the road, just wanted to talk a little bit about the purpose and objective of the videos that I've been making since late 2015. Well, I'm here really to try to give you my opinion on things, how I see things monetarily, economically, sometimes geopolitically. And yes, we talk about markets, technical analysis, which is something that my background is based on. I worked in the city of London and I was a futures and options broker. But I still think that the most important thing for everyone out there is to learn about what real economics is, that it's not PhD economics. It's very simple, actually. It's about creating more value than you absorb and building a surplus. And yes, it will always be the thing that keeps people going. It's not money itself, especially not fiat currency. Money is not the object. That's what I try to put across. It's creating value. And if you're able to create surplus value, I try to tell you how I think one can keep that value, save that value. And that's why I always talk about gold and silver, of course, but also other assets that retain their value. So enough of that now. Yes, yesterday we saw a lot of optimism. Some people were saying that Kevin McCarthy folded and that Biden won. They're gonna somehow get everything through, lift the debt ceiling. And that might be so, even though I don't think it's over by any stretch of the imagination. And I think it's all part of the psyop. It's trying to, because things have gotten so bad in terms of the debt ever since, well, actually we have to go back to the Federal Reserve, the inception of the Federal Reserve on December 23rd, 1913. It was a timely inception, wasn't it? A few months later, they had a major war started in Europe, just in time for the Federal Reserve to finance that from far away from all the action, right? And yeah, so since then, and the debt has just gone exponential. And why is that? Especially after 1971 as well, when Nixon closed the gold window. But yes, in the central banking national debt system, the game is creating crises and having an excuse to create this really dishonest currency out of thin air and back it Well, the flip side of this currency, of course, is the debt. The government issues the government debt. There's all the patriotic war bonds, and the Federal Reserve and the Bank of England, all the central banks buy it. The public buys it, and they get screwed, of course. All the war bonds from World War I, people got screwed because of inflation. And it keeps happening, and it keeps happening. And now we're at a point where, the national debt is approaching 30. Well, it's probably going to go over 34 trillion when they lift the debt ceiling. How long would that ceiling stay in place? Not very long. And that's not even talking about the unfunded liabilities of 230 trillion, including that debt. And that's not talking about the whole debt in the world that I think has just risen to 310 trillion. World GDP, I think, is around 90 trillion. So it's more than 3 times world GDP. And how do they keep this debt going? Well, it's through Psyop.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
It's through crises, through fooling people as well. And the fooling people is really easy, it seems, because even the supposed experts in the economic field, in finance, they're completely, they've been completely brainwashed. They don't understand what inflation is. I mean, you just have to watch Rafi's interview with a former IMF economist, PhD economist, one of the top heads, according to Bloomberg on Wall Street. The guy epitomizes the Keynesian mentality, the Keynesian philosophy, and completely ignores economic reality. And I think that's what's going on. That's why it's so frustrating. And I'm going to show you a few charts today. Because we're starting to hear, and it feels very much like a crack-up boom is starting in Japan. We're starting to hear that, the Japanese stock market is the highest it's been in 30 years. It's outperforming the S&P, the Nikkei, and the Topics. So we're going to look at that, and it's interesting because one of my biggest clients in the 90s, even though I traded mostly government bonds, one of my biggest clients was in Italy, a big mutual fund there. Not a hedge fund, but a mutual fund. And they had all kinds of funds, bond funds, of course, but they also had index funds, stock market funds. And I used to do a load of Nikkei and Topics futures for them. Remember staying up after midnight at home, actually, calling the broker in Tokyo to execute Nikkei futures trades and also Topics. And I don't think later on they would have allowed me to do that, but back then my boss said, you're gonna have to do it from home, because this client liked to I could have left the order with the broker and not have gotten up in the middle of the night. But this client wanted to work the order, like it was big orders, like 1,000 or 2,000 lots, and I have to do a certain amount every 10 minutes. So I had to get up and do that. So that's quite interesting. We're going to look at that. But I also want to maybe tell you when I think this psyop will be over, because I don't think psyops last forever, because psyops are not the truth. And the truth always comes out. So we're going to reference Human Action by Ludwig von Mises for when I think that will happen. This might give you an idea what they say here at the end, why this is happening. And these are from the the fund managers that are in this fiat world. This is Fabiana Fedeli, Chief Investment Officer for Equities and Multi-Assets at M&G PLC. And she said on Bloomberg Television, while we believe Japanese stocks still have further to go, companies in Japan were improving their balance sheets and were giving back to shareholders in terms of buybacks and dividends. And this is someone else here from Pictet Wealth Management in Switzerland. The outperformance of Japan versus Europe and US has been happening and will continue as long as the BOJ doesn't change. I think that's a key criteria. What does he mean by the BOJ doesn't change? Well, as long as the BOJ doesn't keep trashing the yen. And that's what they're measuring the topics and the Nikkei in a dying currency, and you can measure it in dollars. It's also going to be dying. So I thought it'd be interesting to look at these indices versus real money versus gold. Well, here I've got the top picks versus the Japanese yen, and unfortunately I can only go back to around 2006 because that's how far TradingView goes for the gold price in Japanese yen. But you can see that this is how many ounces of gold in Japanese yen you need to buy one topics. So you can see that it's gone down quite significantly, hasn't it? And it's nowhere near the highs that it was back in 2006 and 7. So versus real money, it's really going sideways. Yes, it's picked up a little bit here if you look at this weekly chart, but I did the topics as well versus the US dollar. So this is how many US dollar price of gold that is. So that's how many ounces of gold in dollars you need to buy a topics. So yes, a 33-year high in a dying currency. But as you can see, 33 years ago, back in, was it 1989? You needed just over 7 ounces of gold to buy one topics. That's gold in dollars. And now you just need one. So this is what I'm trying to tell you here. We need to start valuing things in terms of gold and even silver eventually. And I also looked at this chart here. This is how many barrels of crude oil you can get for an ounce of gold. Yes, back in 2020, there was the major spike there. And this is to do with the fact that oil, the NYMEX crude oil contract went below zero. And that was the freak incident. And what happened there? Well, because it's a futures contract, there's a delivery mechanism. And with the lockdowns, there's nothing going on. All the crude oil was piling up. And there's no storage space in Cushing, Oklahoma. And people had this oil. They had to get rid of it because it would have cost them more to store it somewhere else. So they gave it away. But if you look at this chart, really, look how stable the price of oil has been in ounces of gold. Pretty much, a straight line. Yes, there are ups and downs, but I would say yeah, anywhere between 15 and 30 there. And I would say 20 seems to be a fair value. 20 barrels of oil for 1 troy ounce. Right now we're at 27. So now to when I think this psychological operation will end, when people will wake up. And of course, we've been awake for many years, me especially. Some of you have been awake longer than others, of course. Some of you are probably not awake and you're watching me and you're saying, what's this guy saying? But we're going to go here to page 427 in Human Action by Ludwig von Mises. I think you can find free PDF for this. And it's under indirect exchange here. And this is what he says about purchasing power of fiat currencies. But if once public opinion is convinced that the increase in the quantity of money will continue and never come to an end, and that consequently the prices of all commodities and services will not cease to rise, everybody becomes eager to buy as much as possible and to restrict his cash holding to a minimum size. For under these circumstances, the regular costs incurred by holding cash are increased by the losses caused by the progressive fall in purchasing power. The advantages of holding cash must be paid for by sacrifices which are deemed unreasonably burdensome. This phenomenon was in the great European inflations of the 1920s, called the flight into real goods, or Flucht in die Sachwerte, or crack-up boom, or Katastrophenhauser. The mathematical economists are at a loss to comprehend the causal relation between the increase in the quantity of money and what they call a velocity of circulation. So what does he mean by the mathematical economists? Well, those are the Keynesians, because Keynes, he was the first one to bring in these, all the calculations, all the equations and charts. And yes, the PhD economists. And I'll continue here because this is when it happens here. This is... and he talks about, von Mises, the process, the evolving process of disinflation. The first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. There are still people in the country who have not yet become aware of the fact that they're confronted with a price revolution, which will finally result in a considerable rise of all prices, although the extent of this rise will not be the same in the various commodities and services. These people still believe that prices will one day drop, and I don't think they will. And why is that? Well, because to keep sustaining this massive amount of debt that we have, and that's why this debt ceiling situation is... Yeah, they're going to resolve it, and the debt is going to go through the roof. They're going to have to keep inflating because the other side of the debt in a fiat currency system is the currency. Waiting for this day, they restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it is not yet too late for the government to abandon its inflationary policy. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the crack-up boom appears, everybody's anxious to swap his money for real goods no matter. So I think you and I know, or most of you out there watching this know that this is what they're going to keep doing, inflating. But the great majority of those who are buying into the Psyop don't know. But they will find out eventually. So with that, let's quickly look at where the markets are this morning. It's just gone past 8 a.m. London time. We've got spot gold trading at 19.77. It's down just over $4. High's been 86, low 76. Silver is down $16 at 23.56. High's been 80, and the low has been 54. So we're near the lows. The Dow futures is basically unchanged. So the stock market futures are basically small in the red. So I won't go through them. Of course, they had a big day yesterday. The currencies, we got sterling down about 0.2%, 124.60. The euro is down 0.1 at 108.27. The dollar is unchanged versus the yen, 137.55. And the dollars continue to rise versus the yuan at 703.42. I'm going to skip to the commodities because we're running a little bit longer here. Crude oil, WTI, is down a little bit here, a third, but it's at 72.65. I think it had a pretty good day yesterday. Brent is down 0.25% at 76.60. Don't forget, WTI was below 70 a few days ago. Platinum is down $3, trading at 1,070, and high-grade copper is down 0.5% at 374.03. And we'll quickly look at the U.S. yield curve. We got the 2-year continue to rise. It's at 4.16 now. The 10-year 3.58. So the curve is continuing to invert. And the 1-month T-bill is at 5.62. So there you go. A lot happening, of course. And don't forget, the truth always comes out. Real value always comes out. And what we see in fiat currencies are just, they're not really real, in my opinion. And that's why the markets feel a bit strange. And that's why maybe a few years ago in Venezuela, their stock market had a really good year, despite the fact that their currency was like becoming worthless. And the same thing happened in Weimar, Germany. The German stock market priced in that dying currency also looked good. So with that, I'm going to wish you all a very good day. Take care. Bye.